If you are among those who do not have emergency funds at hand, you are in danger because what will you do if an unforeseen disaster arises? People who have experienced unexpected bills can tell you how grateful they were to have an emergency fund or how tough it was to locate the money they urgently required. This video will inform you of the importance of emergency fund investment, so stay tuned. 8. Prevents debt. There are undoubtedly other options for swiftly accessing cash to meet the expense of an emergency, such as credit cards, unsecured loans,
For real?
home equity lines of credit, or drawing on other savings accounts, such as retirement money. These solutions, however, usually come with a heavy price tag in the form of exorbitant interest rates or penalties. Although there are numerous reasons to have an emergency fund, one of the most essential is to avoid debt. 7. Improve spending decisions. If the cash is just as far away as your nearest debit card, you may be tempted to spend it on something frivolous, such as a designer party dress or a big screen TV, which is not an emergency. If you keep the money somewhere that is not easily accessible to you, then you won't be able to spend it on a whim, regardless of how much you may want to. In addition, by placing it in its account, you will be aware of the precise amount that you have, as well as the amount that you may still need to put away. 6. You are self-employed. It is critical to have a decent emergency fund in place if you are self-employed, an independent contractor, or in a job that does not enable you to get unemployment benefits. Some occupations provide unemployment benefits. Nevertheless, even if you have one of these positions, you will still need money in case of emergency. Stay for more on this subject, which will come up subsequently. Furthermore, if you are aware that your contract, it may make sense to use the proceeds of a life insurance policy to pay off debt if you're deeply in debt and don't have a spouse or children to whom you may leave the policy's proceeds. There is no way around this if you do not have entire life insurance with a cash value component. A part of the cash value of your whole life insurance policy may be used to pay off debts, while still leaving a portion of the profits to your loved ones in the event of your death. Anyway, do you know what you can also do to also help us in our lifetime? It's subscribing to our channel. Kindly do so for us. If you're still stunned by this, just wait until I tell you that you may be able to minimize the amount of debt you owe by filing for bankruptcy subsequently. Number 4. Make more money. There are several methods you may raise your income and pay off your debts faster if you're really motivated to do so within a few years. Consider strategies to start making extra money for at least a few months and make debt removal a top priority. Whether it's taking on part-time work or negotiating a raise with your employer. Number 3. File for bankruptcy. When everything else fails, consider declaring personal bankruptcy as a final resort. However, in severe cases, such as when you have no income, or if your credit card payments or medical expenditures are utterly overwhelming, a Chapter 7 bankruptcy petition is suitable. You might also look into Chapter 13 bankruptcy if you feel ethically bound to pay back your obligations. After all, this is your right.
You have the right to walk into bankruptcy court and say, listen, I'm in over my head. I need to save my family.
Number 2. Try the debt snowball method. The debt snowball strategy is one of the easiest strategies to get out of debt quickly. You'll use your monthly debt payment money to make minimum payments on all but one of your bills if you use this plan. As a consequence, this loan will be paid off faster than the minimum monthly payment. When that obligation is paid off, you choose a new debt to pay off and reallocate all of the spare income to it. Continue in this manner until all debts have been fully paid off. The additional dollars accumulate over time, but the amount you set aside for debt payments remains constant. 1. Medical issues. If you have a major medical condition, you may need to utilize all of your deductible money each year. You can also have a series of regular tests that add up rapidly, or you might need to use up all of your sick leave and end up taking unpaid days off. A well-funded emergency fund may assist you in dealing with these expenses and make it simpler for you to get through these trying times. However, the problem is that medical costs might be absurdly expensive. Even if you have an emergency fund, it may not be enough to meet your medical expenses, particularly if you are unable to work while receiving treatment. Medical expenditures may be more easily managed by purchasing insurance and establishing an emergency fund large enough to cover any co-payments. Counting on an emergency fund to meet medical expenses in the range of 3 to 6 months' wages may be too ambitious. So, how much should you set aside for unforeseen circumstances? An average emergency fund should be able to cover 3 to 6 months of living expenditures. The exact amount you need will be determined by your income and spending. 3 months' worth of costs.
Borrowing money without knowing how you will repay it and when you will repay it is not a good debt.
May be enough if you have 2 sources of income. You may wish to aim for 6 months if you live alone or are the sole income in the home. Using bank and credit card records from the last several months, you may be able to figure out how much you spend on necessities like housing, food, insurance, utilities, and transportation each month. That is all we have for you today, and thank you for joining us. You can watch our video, How to Start an Emergency Fund. Emergency Fund Investment. If you are unsure of how to start the process of establishing an emergency fund, see you there and take care. Number 4. Make more money. There are